what's happening? We're selling out to foreigners. They're taking over everything. Wealth-producing companies, the best the world has known. We've sold more than 8,000 of them in 10 years alone.
Most Americans believe, Craig, that the economy essentially crashed in September of 2008. And I'd like to get your perspective, as you're a journalist that's been writing about the economy for such a long time, about the economy and why it seems to have crashed in September.
Well, this is actually an interesting point. The economy as a whole did not crash in September. The stock market has been plummeting for the past 10 or 11 months from its highs last year of over 14,000 points. It at one point bottomed out near 7,500.
Isn't 14,000 pretty high?
Well, 14,000 is a really high number, but it's an artificially inflated number. For the past several years, we've had this growth in the stock market, which really wasn't natural. Right now, the stock market is ebbing between 9,000 and 10,000 points, and that's really where it should be. What we've done is shed those extra points, the extra value, from the top of the stock market that was unnatural inflation. So when the stock market plummeted, those represented a decrease in the share prices of companies, a decrease in the paper value. But the economy as a whole didn't crash in September. The economy has been crashing for over a decade. The United States got introduced in the World Trade Organization in 1995, in NAFTA before that, in the Central American Free Trade Agreement and the Andean Free Trade Agreement. There are a lot of free trade agreements that have been undermining our manufacturing and industrial base for over a decade. And that's really what's hurt our economy. Furthermore, you had the housing market, which has always been a bastion of wealth in the United States. Americans always drew wealth from their homes, and the housing market evaporated over the last year. Credit markets froze, banks stopped lending to people, and basically the economy ground to a halt a long time before these stock market issues would have had any effect. The stock market has a lot of value in it, but as a whole of the economy, it's a very small amount of money compared to the United States as a whole.
I think it's very obvious that free trade agreements like the World Trade Organization have caused insurmountable problems here in the U.S. and our economy. But I'd like to talk a little bit about some internal issues here. Recently, the Fed cut the interest rate by 0.5%. Can you go into that a little bit? I mean, I can see advantages and disadvantages to that.
Well, there are advantages and disadvantages to the Federal Reserve lowering rates. It's sort of a catch-22. When you lower interest rates, you increase the money supply. You make money more available to people. You make it more available to lenders, more available to borrowers, more available to consumers. Unfortunately, when there is a larger pool of money, the value of each individual piece of that money decreases, and that's called inflation. And when you have inflation, you see prices go up, you see the value of products go down, and the value of the dollar that you hold in your hand decreases. So when the Federal Reserve lowered its interest rates, it did so to unfreeze the credit markets, which we just discussed, which froze up in the last several months and really stopped lending to people. By lowering their rates, they hope to increase lending, but what it's done potentially is undermine the value of the very money that we hold.